Good afternoon, and thank you for joining us today. I'm Taylor Combluzier, a mining analyst at Red Cloud Securities. Today's webinar features Strategic Metals, which is a successful project generator with a large portfolio of interest in over 120 properties and share interest in other exploration companies through project farm-outs, investments, and royalty sales. Since our previous webinar with the company last fall, it has intersected high-grade copper, cobalt, and gold at its BAT property in Yukon. It's also sold 11 critical metals properties to a private company, optioned its allotted porphyry property to Benjamin Hill Mining, and discovered new veins at its Mount Hinton gold-silver project in Yukon. Today, I have with me on the webinar Doug Eaton, who's President, CEO, and Director, as well as Richard Drexler, who's Vice President of Communications at Strategic Metals. The format of today's webinar will be comprised of two parts. In the first part, Doug will provide an update on Strategic Metals, including its latest corporate and exploration activities. And then in the second part, we'll take your questions live. So please submit your questions using the chat and we'll get to as many as we can. I'll note that you can type them in at any point throughout the webinar. To start, we'll handle the disclosures and then get into it. So for Strategic Metals, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate presentation located on the company's website. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Strategic Metals specific disclosures. So with that out of the way, I'll turn it over to Doug, who will update you on the company and what you have to look forward to.
Thank you very much, Taylor. Okay, I think a number of people on the call are probably somewhat familiar with the company, so I'm going to focus more on what's new, but I have to give a little background first. So without further ado, we'll jump into it. As stated, there's some disclosures, some forward-looking statements. Okay. So a little bit of an update. We currently have 96 wholly owned mineral properties, mostly in Yukon, few in northern BC and western Northwest Territories. And they cover just about every metal that a person would want to look for and many, many deposit types. In addition, we have 12 projects that we currently have NSRs on. Those are, again, cover a fairly broad spectrum of metals but are mostly located in Yukon. None are in production at the present time. We've got a number of projects where we have companies farming in. We've highlighted two there. Benjamin Hill, who is earning a 60% interest in our allotted porphyry property, and Alpha Copper, that's earning 70% in the Hopper porphyry skarn property. Both of those projects, have substantial cash payments attached to them, and the options also require for very large exploration expenditures. In the case of Alpha Copper, they have to spend $5 million on exploration, and in the case of Benjamin Hill, $11 million to turn in on the project. The equity interests allow us a lot of options. We can either participate at 30 or 40%. We could sell that interest to an outside third party. We could negotiate with the majority owner and maybe make a conversion to shares. And in the worst case scenario, we just after the JV is formed, just dilute to an NSR situation. So it gives the company lots of flexibility on those projects. As mentioned, we have a big portfolio of shares in other companies, currently worth about $35 million. We'll talk more about that later. And we still have a healthy cash position, about $2.9 million, although that will fall as some of our exploration activities are paid for this year. Won't spend too much more time on the others. We've got slides covering those points. Again, I won't spend much time on the management team and the directors. Just suffice to say, it's a very stable group and a lot of diverse backgrounds, so it gives a company good leadership. This is one of the most important slides for an investor at the present time. I'm going to start with the shares outstanding, about 11 million, 9 million options, 120 fully diluted. That's important because we haven't had a lot of dilution in the last 10 years, about 10%, which sets us apart from most of our peers. We've been able to operate from cash flow and our existing revenue streams, have pretty much kept pace with our expenditures. So we're in good shape there. Our market cap is about 26 million. As stated before, about 2.9 in cash. Shareholdings 3.5. So you can see that we're trading at a substantial discount to our share value and our cash position. And that, of course, doesn't give us anything for our 96 wholly owned properties or our royalty interests. We've made distributions to shareholders totaling about $20 million over the past 12 years or so. If a person had held on after the distribution was made, that could have been magnified further to four times up to as much as 10 times. But if a person sold out as soon as the share distributions were made, they would have made it would have totaled 20 million in distribution. No debt in the company. Shareholders. It's important to note that the management actually owns 8.7%. That's not on a fully diluted basis. Sorry, that's on a outstanding basis, not a fully diluted basis. Which most companies, when they say give the management position, they include the options. We don't in that number. Condier, Sprott, and Ruffer are other major institutional shareholders in the company. Won't again spend much time here. It's something that just shows why we're exploring in the area we're in. The belt of rocks that goes through Yukon is quite well endowed with gold. In fact, there's new gold discoveries being made every year up there, and it's been very prolific in that regard. It's also a major porphyry copper belt, major lead zinc belts going through the territory. So very diverse, attractive geology. And recently, that's been reflected in the number of majors that have made really large investments, either by buying projects outright, making major investments in company, or JVing. So it's a good place to be working. As we said, we've got about 96 projects at the present time that are wholly owned. The growth of our royalty and option portfolio is shown in the slide on the right-hand side, the bar graph. You can see that we're growing quite rapidly. We're in the next month or so, we'll be converting another 11 projects over to royalties from options. But I think we'll be signing other option agreements as well. So, we're really putting our properties to play as we should at this point in the market. We've still got a number of really good projects available to us. Lots of accrued assessment credit. We're not under pressure to spend a lot of money on exploration at the present time. This year's exploration budget will be about $700,000. So we're not blowing the treasury on exploration. Great relationships with First Nations. Again, this is on the website. I won't spend too much time on it, but I think we're one of the most progressive companies in that regard, certainly operating in Yukon, and I think one of the most progressive in Canada. This is important because there's a lot of attention currently focused on the Tombstone Gold Belt. There's the Brewery Creek mine operated back in the over by Dawson, operated in the early or late 1990s and early 2000s. Currently, the most prolific mine that's in operation is the Eagle mine, which is owned by Victoria Gold near just a little northeast of Mayo. That's right adjoins, or very nearly adjoins, the very prolific and historic mining camp of the Kinu Hill district, which is now being purchased by Hecla. Joining that to the east is the Ormac discovery that was made by Banyan. It's expanding. It's about 6 million ounces now and still growing. Further to the west, we have the RC and the Florine deposits, both over 1 million ounces of gold. And perhaps most importantly for us, Rogue deposit out in the eastern part of Yukon, closer to the Northwest Territories border, is being explored by Snowline very successfully. It's going to be a large open pit deposit, I think. The numerous drill holes of several hundred meters of better than a gram gold, and some of them better than 2 grams. So, very attractive discovery. All of those occurrences are in the reduced intrusion category of gold occurrences. We've got a number of projects in the belt. Projects that are optioned out are shown in blue, and the ones that we still own 100% are shown in red. And you can see that we've highlighted two of our wholly owned projects, Mount Hinton and Lance. We're going to show you a little bit about them now. So Mount Hinton, again, we're a project generator. We don't usually drill, but we did a drill program a couple of years ago, and I don't think people realize exactly how successful those results were. The best results came from an area that we were only able to access toward the end of the program, called the Southwest Zone. That was a brand new discovery that we only made 3 years ago, and it's a very large quartz vein. It's about 7 to 8 meters wide where it outcrops. We drilled below it, and it's not true thickness, but it's near true thickness. One of the holes was almost 5 grams of gold across 12 meters, and a hole about 70 meters away. And these are both about 75 to 80 meters below the outcropping showings. The second hole was nearly 4 grams with 182 grams silver across almost 10 meters. So those are really good gold results, and with significant silver in some cases. That target remains wide open down dip and along strike. We're able to follow it as a recessive linear for more than a kilometer to the west. And where we've seen bedrock within it, we're typically getting assays that are greater than an ounce per ton across a meter or more. So it's a really promising target. I think someday we're gonna farm this thing out, and I believe that we're going to get a very good deal on it. In addition to the approximately 80 known veins on the property, there's also potential for intrusion hosted reduced gold, like we see elsewhere in the belt. And in the extreme northwestern part of the property, we're in a structural setting that's very similar to Banyan. So lots of potential there. Lance, that clearly it's the same type of target as Snowline. It was staked at about the same time as Snowline, on the same type of stream sediment anomalies. We've done some work in there and had, I think, some pretty spectacular results already. Extremely strong arsenic anomaly, one of the major indicators in that district for reduced intrusions. And we've got gold results up to 8 grams per ton in soil, so pretty strong response. The other thing that beside the geochem that's really critical is the mag lows. And you can see in the northern half of our property, right on the western boundary, there's a very well-defined mag low with no sampling over it. We've had a crew in working on that already this year. And similarly, to the north of the main geochem anomaly, there's another very pronounced mag low. In fact, it's got 2 lobes to it. And again, we've had the crew in working on that. So in the next few weeks, we'll be getting results from there and hopefully getting some favorable results. I can tell you that we're already encouraged by the prospecting because we've extended our claim block to the west of what's shown on this map. So we're just waiting for results. Mint, we did some drilling there this year. We previously drilled and had some positive results in one of the holes, over 300 meters, grading better than 0.2 grams gold, which in a porphyry is a very good result. But it looked like it was on the outer part of the porphyry system. So prospecting showed that we had another target further to the north where there was more moly and copper. And so we drilled some holes in and around that this year. And again, we're waiting for results from that work. Okay, we talked about having shares in other companies. Right off the top, I mentioned that there's another ball going to be added to this soon. When the critical metals deal closes, it'll convert 11 of our critical metals projects to NSR interests, and we'll have another company on there, Blue Thunder, that will have 19.9% interest on. So that's in addition to what you see here. I'm going to really quickly run around through some of the key ones. Rockhaven, I think some of you are probably familiar with. Their Closet project has progressed really well. They're in the process of completing a pre-feasibility study now. It's delayed somewhat. It'll be probably early next year now, not because of complications, but because they're getting much better than anticipated metallurgy in some of the testing that they're doing, and they can't finalize the process design until and even complete the resource estimation until all the metallurgical results are completed and they know exactly the best way to process the ore. But I can tell you that the delays are for good reason, and I think it'll only make the thing more attractive. So very happy with our investment there. We have about 30%. I think that project is going to proceed very positively in the next 6 months or so. Terra CO2, 11.7%, but we have warrants that can bring us up to around 17%. They're moving toward commercial production. They've announced that they expect to have a plant operating in Q1 of next year. Raised big bucks, over 46 million US from Breakthrough Energy, Rio Tinto, and Lennox, the big home builder in the States. They're well financed and certainly have some very well-heeled investors behind the company. So very happy with our investment there. GGL, 34.5% interest in that company, working on veins in the Walkerlina, Nevada. There's 4 former producing mines on the property. And in addition to that, they've recently defined a very interesting geochem anomaly and geophysical anomaly that are almost completely coincident, defining an undrilled porphyry target. And that's in a belt of porphyry occurrences. The Yarrington district is the best known in the area. I think that could be a very important discovery for GGL. Honey Badger is one of the companies that's working in the Tombstone Gold Belt. They have the Plata property that they purchased from us. Precipitate, very well funded. They've got over $6 million in their treasury. Barrick's working on a project that they have in the Dominican Republic, and they're exploring in Newfoundland. Broden Mining, we're still waiting for a signature, but that project is still, moving ahead. There was a flurry of excitement earlier this spring when it looked like the one First Nation we're waiting on a signature from had changed management or changed their chief and council, and I'm optimistic that will get finalized as soon as the summer's over. Summer is a very difficult time to get First Nations to focus on much of anything except traditional hunting and gathering, and I think that project will make some serious progress come fall. So very happy with our shareholdings. I think there's tremendous leverage for the company there. And this is just a highlight of why we think Broden's important. Very large resources still on the property. I know there's a PEA being completed there, and it's just waiting to go into go public, or release that PEA and go public. Rockhaven, I'm going to flip through these quickly to give people time for questions. This is all on the website. You're more than welcome to go on and take a look at it and ask Richard or I questions after review if you like. So just again, go over some of the main catalysts going forward. Rockhaven's pre-feasibility. I think that when that's completed, there'll be a recognition that this project is vastly undervalued, and they'll be entering permitting at that point. The PEA, is, as I said, for Broden, is ready to go, and I think they'll go public soon after it's presented. But first, we have to get the transfer agreements completely finalized, and that's a key step for us. Terra CO2, again, moving toward production. Any one of those 3 companies, if they're successful, I think could, the value of our shares in them could equal our current market caps. Each one of them has that potential or more. In the case of Terra CO2, I think it could be much more than our current market cap. And again, we've got complete that transaction with the critical metals. Again, we've got other negotiations underway on other deals, and we've got results from our own properties that I expect to see in the next few weeks. So stay tuned. Hopefully, we'll have some good news for people in the near term. And again, I welcome you to contact Richard or myself there's contact information there. So we're happy to talk to investors anytime.
Perfect. Thanks a lot, Doug. That was a great presentation. So for now, we'll turn over to the Q&A portion of the webinar. And just a reminder to everybody on the line to type your questions into the chat box. So with that said, we have had quite a number come in here. Okay, so I guess we'll just start at the beginning here. Is there any updates on the critical metals company or deal? I assume the one that was announced earlier this year, is their IPO still on track?
Yep.
Any timing for that?
Yep. A company called Blue Thunder has announced that they've acquired the right that was held in the private company that we'd initially done the deal with. We're just waiting for them to complete all the underlying agreements or terms that were subject to the original agreement. And when that's done, we'll be getting 19.9% of that company after they've completed a fairly sizable financing. And at that point, our properties will be sold, so they'll convert to royalty interest. So yeah, no, it's definitely moving forward, and I expect that'll be done in the next month. If it isn't completed in the next month, they have to make another cash payment to us, or the deal will terminate, which I don't think they want to do. So I think that we're on track there.
Perfect. Okay. Now we've had a number of questions come in referring to both Terra CO2 and then Broden. I guess on the Terra CO2 side, assuming the warrants are exercised, what are the odds that you'll offer a private placement to augment your cash position? Or then there's one more part to that. And do you know whether you'll exercise the warrants?
Well, I right now I think our inclination is to exercise the warrants. They have a strike price on them of 25 cents Canadian. It's actually 19.6 or something American, but it converts to about 25 cents. The most recent financing that was done on it was done at about $1.25 Canadian. So we're really in the money on it. Whether we exercise or not, we've got a little bit of time. There should be updates coming out to us that give us a little bit more direction about the timing of their commercialization and what plans they have in place. But everything I've seen so far suggests that they're making some pretty serious progress. They're definitely have potential to be a major disruptor in the cement industry, and if they have all the right tools in place. I think they've built a very strong management team in the last several months to exploit the technologies that they have. So unless we see something in the next month or so that really says no to us, we'll exercise those warrants.
Okay, great. Let's see here. We've got with Broden, what is holding the signature? What are the main obstacles? Is that just the changeover in council and all that?
I'm sorry, you're really scratchy, Taylor. Could you repeat the question?
We have a question just wondering what is holding the signature? What are the main obstacles with Broden?
Oh, sorry, on Broden. Yeah, sorry, we switched topic. Yeah, it's the Faro Reclamation Plan, which are the ground that we're acquiring from Government of Canada is part of, is a three-party agreement or four-party agreement between the Kaska First Nation, the Selkirk First Nation, Canada, and Yukon. And all parties have to agree to any major changes to that reclamation program. Canada proposed a multi-year change to it, a multi-year plan about 8 months ago. And Selkirk still hasn't formally responded to a number of points in that, including the mining plan that Broden has. Their main concern, according to people we've talked to, is making sure there's good provision for water quality and there are good assurances that water quality downstream will be maintained. I think the mine plan that Broden has will more than cover that concern off, but it has to be formally presented to them, and they have to sign off on that. Canada can't move or doesn't want to move without unanimous consent of all the parties. So Canada and Yukon are on side. The agreements are all just waiting final signature, but Selkirk has to sign off first.
Okay. We have one here just wondering about Mount Hinton. Has Hecla expressed an interest?
It's been discussed. I think they've been preoccupied in the last several months in closing their takeover attack resources, who have ground out to the northeast. Quite frankly, in my opinion, the attack ground, although it was predatory of them to have picked it up, they picked up a lot of resource and a lot of potential. In the near term, I don't think there's any question that Mount Hinton would be a much more significant acquisition for them and meshes much better with their current operations. It's it's road accessible. It's very near their mill. It's got potential for multiple mining places on it, which would satisfy a lot of the problems that they've had with their operations in past, or Hill had with their operations at the mines in the district in the past. They've always had a problem mining enough material to feed the mill and operate at full capacity. And I think that the areas they're looking to mine will still cause issues for them in that regard. Mount Hinton has potential to operate at a number of locations, some of which are quite large tonnage potential. So I think that we'll be talking to them more. We talked to them a little bit, and I think there'll be further discussions with Hecla.
Great. Okay. We have one here just wondering about the potential for any copper deals on the horizon in terms of optional properties. What does that space look like right now?
Well, we've still got a number of porphyry copper projects that are available for option or sale. We've talked to a number of groups about it, and I think that there is good potential. We've also been talking to a major about not only optioning some of the ground, but also some sort of alliance for further exploration in the area. So I think there's excellent potential. Copper, the world needs a lot more copper if it's going to follow electrification models that have been proposed for green energy. And I don't know where there aren't anywhere near enough known deposits to satisfy the demand. So I think that in the next few years there'll be lots of deals done on copper. We're well positioned. I just don't want to rush in and do a dumb deal. I'd rather, the numbers in porphyry coppers are enormous, so we've got to be very careful who we deal with and what terms we get for the projects.
Right. And has your focus shifted at all within your portfolio to critical metals, given the current market and just emphasis by governments and green transition?
Well, yeah, it's shifted in that there's a very broad definition of critical metals, and they include zinc and copper, which, if you're going to explore for critical metals, frankly, is the best place to put your money, because you're more likely to sell a large copper or a large zinc project to a major than you are a tungsten or even a lithium property. Yukon's not a great place to look for lithium. There's lots of vanadium, and I think we've got a handle on. We still have some in our portfolio. It's with the exception of the Wellgreen deposit, it's not a fantastic place to look for nickel. I think that we had scooped up the best of the critical metals projects that were available, quite frankly, in the past. And as I said, we still have a few that we can deal, but I think that the main critical metals projects are ones that people don't often put in that category. As I said, copper and zinc. That's where I would put my main focus if I was an explorer for critical metals. That's where you're most likely to get a return on your investment.
Yeah. Okay. So we have a couple of questions here, just more on the corporate side. Just going back to potential future private placement, I guess, is there any level of cash that you would have that would be a trigger point for you to raise more money?
Oh, yeah, if we got below $1 million or thereabouts, I think we'd probably think about it. But um, I don't see us getting there in the near term. We've got a lot of stock that we can sell if we get a bit of liquidity in the market. Um, I think that's likely to happen. Also, the deals that we have under option um, pretty much paid for our administrative costs this year, and if they all are maintained, and right now I think there's a good chance of that, and the payments are made at the levels that they're anticipated, we'll have way more than our administrative overhead and probably cover our expiration as well from monies that are derived from those options. So I don't there's no urgency. That said, um, if the market gets a little hotter and someone comes to me and makes me an offer I can't refuse it, it's been my experience that if there's money on the table and it's a good premium to the market, you're a fool not to take some of it. So I wouldn't say we'll never do or don't have any intention of doing a private placement, but there's none planned in the near term.
Perfect. Okay. Another one here, just wondering if you're considering a share reduction or consolidation at the moment.
Not right now. Again, most times people see consolidation as a destructor of or a destruction of value for the shareholders. We're not diluting ourselves rapidly. The number of shares we have out are I think manageable at this level. A lot of them are tied up with institutional holdings. Our float is very low. I think we've got a lot of leverage and very little buying has in the past moved the stock up quite significantly. So I don't think there's any need to consider any kind of consolidation or rollback with strategic at this time.
Okay. We have one here. What is your hypothesis about the low market cap compared to intrinsic value? What is the major threat or danger the market seems to be concerned about?
Okay, well, one of them is typically complex companies, call them holding companies or whatever you want, which some people have categorized as traded at a discount to the breakup value. I think that's part of it. I think also the fact that some of the shareholdings are still private, although they have enormous leverage. The fact is there's no liquidity with them, and in fact there's limited liquidity with all the stock, to be quite blunt, in this market. So I think that certainly weighs on people's valuation of where we're at. But the market as a whole, the whole sector is pretty beaten up. There's a few winners in it, but they're companies that have made major, I'll use the word world-class discoveries. Snowline, for example, is doing extremely well because they've got one of the most interesting gold occurrences in North America. But most companies are suffering to get recognition from the market, and quite frankly, I blame part of that on the regulators in that they make it prohibitive for companies to merge and get rid of some of their overhead, and it's very, very difficult and time consuming and relatively expensive. And there's just too many companies. The market would be much better served if we could reduce the number of companies by half, so it's a little bit easier for investors to understand what their options are. And I don't know if that'll ever come about in my lifetime, but it would, if I could make one change in the market, that's what it would be.
Okay, and just I guess a follow up on that, has Strategic ever been valued lower by the market vis-a-vis its holdings and opportunities?
Oh yeah, yeah. In 2008, 2009, we were trading below our cash. The value of each share, we had more value in cash than the value of the stock. So we bought back almost 8 million shares at that time at about 95 cents on the dollar. So it was a very advantageous transaction for us. But the company, if it got the price fell off more, I think we certainly consider buying near these prices. It's not out of the question that we are very badly undervalued. But problem for the companies is always awkward, because if we have news coming in that suggests that one of our holdings is really going to increase in value, then we can't really buy back our stock until that becomes public knowledge. So we're a little bit bound up in that regard as well.
Right. Okay. We have a question here. I know we discussed a few moments ago about having your option payments and money coming in the door from that, covering kind of your operating expenses, and that it should as well next year. Are you considering any cost cutting on operational expenses to enhance stock value?
We're always looking for cost cutting on operational side. One of the things that a lot of people don't realize is that we have no employees, so we don't have any employee benefits that we pay out. Richard and I, for example, are contractors. You can look up how much I make per month, but I have to be, given my background, my experience, I think I'm working way below market on my salary, and I think Richard's time is very efficient. But in addition to that, there's things like audit costs and whatnot. We're constantly looking at that to make sure that we're getting good value, or that looking for a more effective way to operate. But I think we run a pretty lean operation compared to many of our competitors. We're running about $750,000 in administrative overhead, and that for a company with the assets that we have and the diversity we have, I think is pretty low.
Great. Okay. So I think we're getting down on questions. So maybe I'll just give you the final word if you have any final thoughts for investors, and then we'll wrap up.
Well, the final thoughts are, one of these days this market's going to turn, and I don't know when it is, and I don't know what'll drive it, but the pendulum always swings and it always goes too far, and I think that we're nearing one of those spots, with the conjunction of strong metal prices pretty much across the board. It really hasn't been reflected in the major mining companies, let alone the junior market. And I think that if an investor is prudent and looks around, I think there's some real steals in this market, and I think that some of our stock holdings fall in that category, and I certainly think that the Strategic itself falls in that category. So, I don't think it's a bad time to invest. And I wish everyone luck with their search for good investments, because I think that people who be faithful to our sector deserve a reward.
Awesome. All right. So with that, I would like to thank Doug and Richard from Strategic Metals for taking the time today to host the webinar with Red Cloud Securities. And thank you to everybody on the line for tuning in with us.